I'm Sam Slater from Fund Calibre, and today I've been joined by Job Curtis, who's manager of the City of London Investment Trust. Hi, Job.
Hello, good morning.
So, UK companies, and in particular larger companies, have been unloved for a long time now. But with the US and other growthier parts of the world having had a wobble so far this year, do you think the UK, it's time for it to shine again?
Yes, the UK has been unloved, and until very recently, it's been underperforming a lot of the other world stock markets, partly the composition of our index, where we have fewer of the big technology stocks like sort of Microsoft or Apple in our index, very few, in fact. Whilst our index is quite heavy in companies like oil companies or mining companies. And so there's been quite a big switch recently with inflation picking up. Is actually to the benefit of the oil companies and mining companies. Whilst actually to counter inflation, interest rates are starting to go up globally. And this somewhat undercuts the valuation of some of these sort of high growth stocks, which are very highly rated in terms of their future profitability. But if the current interest rate starts to go up, that actually technically has an adverse effect on their valuation. So, I think there are a number of reasons why the UK has been out of favour. I mean, it could be sentiment going right back to the Brexit referendum. Whatever we might feel about Brexit, it wasn't kind of particularly applauded by global investors. So that there are kind of variety of factors, and it can be said that UK stocks look cheap even on a like-for-like basis, even if you take out the sort of absence of these big high-tech stocks. Even our kind of oil companies look cheap compared to the American oil companies and so on and so forth. But it is very encouraging. Last couple of months, UK has really picked up and has actually been performing the best of the major stock markets. So I'm hoping there's a bit of catch-up taking place.
And you mentioned there about the rising interest rates. Is that good or bad for dividends?
I think it's in the first instance, it can sort of symbolise that the economy is very strong, which it is at the moment. I mean, actually, we've had a very strong year for growth in the UK. GDP was up over 7% in 2021, which is obviously a bounce back from when it crashed in 2020. But I think so the fact that growth is so strong in the stock market is kind of good for company profitability, which is obviously feeds through to good dividends. So in the first instance, it's probably a sort of as coincident indicator that things are quite good for dividends. And indeed, dividends have been picking up markedly. We're having a much better year for dividends, and we've had special dividends which we've enjoyed in the City of London from companies like Rio Tinto in the mining sector, and the banks have started paying their dividends again after not paying them in 2020. So it's been a much better period for dividends. But the only sort of note of caution is obviously with interest rates going up, if it ultimately triggers a recession or a downturn, then that kind of looking forward will be negative for dividends. So I think just in the short term it's good, but if it kind of the longer it carries on, and if the authorities need to put the brakes on to the extent that brings the economy into recession, then that would be a negative.
And of course, the reason that interest rates are going up is because inflation is so high at the moment. What kind of impact do those rising prices have on UK equities?
Well, I think the rise in inflation obviously means that interest rates are going up and bond yields. So what I was saying earlier, but I think the kind of rate at which people discount future profitability it has changed, and that has a kind of negative overall effect on valuation. But I think within the stock market, there are kind of certain sectors that are clearly benefiting. I mean, the oil companies, the oil price is now above $90 a barrel, and this is obviously very beneficial for the big oil companies. And Shell and BP are big holdings in City of London's portfolio, and we've also got Total, the French-based international oil company. The mining companies, I mean, the iron ore price has been very strong, and there are other areas within the portfolio like real estate, investment trusts, and in fact the utilities, the water utilities have got a lot of inflation protection, and the defence contractor BAE Systems, which is another big holding for City of London, along with the water stocks and real estate investment trusts like Land Securities. So I think within the portfolio I can see quite a few companies with inflation protection of different sorts. So I think it is, some companies are better protected from rising inflation than others. I mean, others, when they have weaker pricing power, they can't pass on cost inflation in terms of their own pricing. I mean, obviously they're going to be seriously affected in a negative sense from inflation. So I think it does require kind of astute stock selection to really pick out the winners and losers in this environment.
And when it comes to BP, obviously with their profits going up so much, there has been talk of this windfall tax. What are your thoughts on that?
Well, I think that would be a negative. I mean, BP is headquartered historically as a British company. It's headquartered in the UK, but it's very global. I mean, it has interest in the North Sea, but its biggest province is in America. Actually, they made some big acquisitions over the years in the US, and they're very big in the Gulf of Mexico. I mean, they're really a global company, and I think if we kind of put windfall taxes on companies that are headquartered and listed in Britain but are global, in the end they're going to move to other markets. So I think it would be very much a short-term fix. And in addition, BP is spending a lot of money. In fact, it's directing a very large proportion of its profits and capital spending to renewable energy, and they're trying to pivot the whole organisation. They want to build up, become a major force in renewable energy. So, to the extent we kind of tax them, then that's going to dissipate those effects. So I think it would be a really poor signal by the UK, and it would make us seem a pretty unattractive home for kind of global companies who would certainly be marked against us for sure.
And one of the big things of last year was all of the merger and acquisition activity in the UK. Is that something you expect to continue in 2022? Well,
yes, we were talking a moment ago about how cheap the UK market's been looking, and I think the evidence for this has been the large number of takeovers. And we have a very open system for corporate control in the UK stock market, and the shareholders own the companies, and if the price is good enough, then the company gets taken over. And we've seen that, and the government rarely interferes unless there are national defence issues, security issues, or competition issues. And I think we've seen a large number of takeovers over the last couple of years, and it simply demonstrates how cheap the UK is. And they come from a combination. I mean, it's either from foreign companies, using their more expensive rated paper to buy our cheaper stocks, or from private equity, which is sort of private funds which are not quoted in the stock market, which own kind of companies. And actually, City of London, we held William Morrison, the supermarket group, which has been a very good company over the years, but it suffered a dull share price despite operating very well over the last couple of years. And they actually received 2 private equity bids. There was a sort of bidding war between two different groups, and in the end, it was taken over. And it was sad to see a company of Morrison's quality leave the portfolio, leave the stock market. But on the other hand, the price was well ahead of where it had been trading before. And given that 2 private equity groups were fighting it, but we had the feeling it was a pretty good outcome in terms of the price it went for, and we were able to reinvest some of the proceeds back into Tesco's existing holdings. So we kept a good weighting in this UK food retail sector.
That's really interesting. Thank you very much.
Pleasure.
And if you'd like to find out more about the City of London Investment Trust, please go to funcaliber.com.